As many of you know, I went to college at East Carolina University, which is in Greenville, North Carolina. Now, I'm sure not everybody out there is familiar with North Carolina's geography, but Greenville, North Carolina is dead smack in the middle of nothing. It's right in between Raleigh and the coast, but in between those areas is farmland and lots of it. It's real flat with not much to see. But one thing I noticed as I was driving through all of these little towns when I went to ECU was there was always a dollar store. There might not be a traffic light, but there was a dollar store in those towns. And that always caught my interest, enough so that I wanted to look into it as an investment. So today, we're going to be taking a look at Dollar General. Hey everyone, and thanks for joining me today. My name's Matt, and as I mentioned there in the intro, today we're going to be talking about Dollar General. Of course, though, I just have to say this isn't financial advice. Please don't take it as financial advice. If you need assistance, see an advisor. This is just for your entertainment. And also, I'm getting pretty good at saying that. That was pretty fast. But also, at the end of this video, I'm going to have a little announcement or just an update for this Watchlist Wednesday. So I want to do the analysis first in case that's all you're after, but feel free to stick around just to hear my announcement and any changes I might be making here to this Watchlist Wednesday. Unless you're in Alaska, Hawaii, Montana, or Idaho, I'd be willing to bet you have probably heard of Dollar General before. But as always, I like to give just a little background information about this company. So they started in 1939 as a family business in Scottsville, Kentucky. So they were originally called J.L. Turner and Sons, and they had that name up until 1955 when the name officially switched to being Dollar General. They are currently headquartered in Goodlettsville, I believe it is, Goodlettsville, Tennessee. And they have just around 16,275 stores in the US, other than those 4 states that I've mentioned. While the name is misleading, and I'm not the only one, I'm sure, that has been fooled by this before, they're not officially what I would call a dollar store because not everything there is just $1, but they do classify themselves as a discount retailer. They even have their own discount brand called DG. Little fun story about that is Dollar General actually outbid Dolce & Gabbana in 2010 for the website address dg.com. I thought that was kind of cool. At these dollar stores, you can really expect to buy anything from crayons and colored pencils to canned goods like beans or soups. You can even find charcoal there, cleaning supplies, basic needs. And so they really have a wide variety of different products. Now, some people look at these like they're almost a grocery store, and I'll kind of hit on that a little bit later. And I'm not a big fan of grocery stores when it comes to an investment. I've said that before, but grocery stores by their nature tend to have razor thin profit margins, which makes them a little bit unsettling for me as the investor. But again, as I mentioned, I truly see dollar stores everywhere. And it's not just in North Carolina. You could be in the middle of anywhere or middle of nowhere anywhere, and it still seems like there's always a dollar store nearby. Now, I did hear a podcast, and I apologize. I don't remember the name of the podcast. I don't remember the episode, really anything about it other than the information. And it talked about, I think it was in Oklahoma, how dollar stores are becoming a problem. And the reason why they're becoming a problem is because they are able to sell products at a price level that most grocery stores cannot. And in certain areas where, a Kroger won't go to and open up a Publix or a Harris Teeter, I know Publix and Harris Teeter are different companies, but where they won't operate, these dollar stores come in and just flourish them. So a lot of times what you'll see is little local mom and pop grocery stores that have like the fresh produce and meats, but unfortunately, they don't operate on the same profit margins that dollar stores do. And a lot of times these little smaller grocery stores fail. In fact, this became such a problem that the amount of dollar stores in certain areas that are allowed to open has actually been capped. And they have to be so far away from each other. They can only have so many to a township. And this, maybe in theory, would hurt dollar stores. And at first, to me, it definitely made me not like dollar stores. But I realize there's a plus side to that. As the investor, maybe not as the consumer again. But with that, when you can only open so many stores, your next step to increasing your profitability is to decrease your expenses. And I think that's something now that we've seen Dollar General do very well. I saw this post, I'll pull it up on your screen for you so you can see it from the Motley Fool. I'm just going to look at this from my screen, so sorry if you see me looking over here. But we could see, I thought this was an interesting comparison, but it comes from the SEC filings from both Dollar General and Dollar Tree, and it shows basically their efficiencies per square foot. Now, as we could see, net sales, really in all of these categories, Dollar General does a much better job than Dollar Tree. Now, this is kind of jumping the gun for the numbers here, but something I just wanted to point out. And as we can see, again, this is kind of sticking with the efficiency aspect of it. Dollar General does an absolutely incredible job when it comes to their profit margins. Again, for somebody who sells as a discount retailer, they are just able to price products more competitively than other people can. And one kind of statistic I heard from the podcast, again, this was a long time ago, so take it with a grain of salt, maybe not be exactly what they said. But when they were interviewing one of these smaller grocery stores that shut down, the guy said he went into the dollar store and saw that somebody was buying he saw that they were selling a 15-ounce can of Campbell's soup for $1. Yet his supplier was only able to sell him a 12-ounce can for $1.25. So immediately Dollar General had the upper hand, or whichever dollar store it was, over this little grocery store, because what they do is they buy in such large bulk that it allows for Campbell's or other canning companies, just as the example, like a Goya, to create specific items for these dollar stores only. So it's exclusive to that dollar store. You can't get it anywhere else. And it's better priced because, again, they have over 16,000 locations that they need to stock shelves with this tomato soup. So, it makes sense why dollar stores have a little bit better of a profit margin, as well as are more efficient than grocery stores, which is why I like these as an investment. Personally, I like Dollar Tree's more because they actually are $1 in the stores. But I have noticed when you go into a Dollar Tree, sometimes those stores just look like a tornado blew through it. It can be really hard to find things. The packages have been opened up. There's things that are broken. And that's not necessarily the best thing to see. But again, everything's $1. And that's where, myself or my girlfriend goes to get things like pepper, salt, aluminum trays for when I, cook food on the grill, all of that good stuff. But when it comes to the actual in-store experience for what there is at a dollar store, I do think Dollar General provides a much better experience, and just they have their own product line, so a little bit more on that later. Another reason why I like Dollar General as the investment over Dollar Tree, and we're going to continue comparing these numbers. I guess I didn't even say it, but yeah, we're moving into the numbers at this point. Reason why I like the Dollar General over the Dollar Tree too is this chart shows it. Again, this is also from the Motley Fool. And we could see at one point in time, 2012, 2014, Dollar Tree was just completely tenfold better. Well, 6% better in their profit margins than Dollar General was. But you see that steep decline right there. That's because Dollar Tree's way of getting around you can only have so many stores in areas but still want it to grow, was they bought out Family Dollar. So that's where they took the big drop from. And I think it's just worth noting that while adding more and more stores you would think would help grow your profits, we can truly see here that it was not actually the case in this situation here, and Dollar General is actually able to maintain their profit margins and have better margins than Dollar Tree simply by minimizing inefficiencies within their own store. So that's something that I like to see, because when you face these kind of borderline a boycott in your area, it's important for you to be creative with the way that you ultimately grow your bottom line. And I think that decreasing inefficiencies is one of the best ways you can do it, because you are able to increase that bottom line without increasing your overhead, which increasing an overhead generally leads to a higher amount of liability. So again, just another reason why Dollar General stood out to me. So now we'll move though into the numbers that I like to make for these videos. And as we can see, Dollar General's market cap is double that of Dollar Tree. And I didn't mention this earlier, but Dollar Tree, including Family Dollars, only has around 1,000 less stores than Dollar General. So it's not like it's the difference between 20,000 stores and 10,000 stores. It's like the difference between 15,000 and 16,000. So overall, the presence between these companies are very similar to each other. And I just think that's worth noting when it comes to understanding like the profit margins and everything. As we can see, these both have really good PE ratios, 18.88 compared to 17.21 for Dollar Tree. So both of these, you could say, are trading at a little bit of a discount right now. I think this industry specifically's average PE ratio is about 20.2 or maybe 21.2 PE. So not a huge discount for the sectors themselves, but always good to see. And again, maintaining that PE ratio under 30 is a great thing to see. This was one of the biggest numbers that stood out to me next. If we take a look at the revenue growth year over year, just that 17.28% that Dollar General is creating or growing versus Dollar Tree's 5.72% is crazy to see. So again, a lot of this has to come back to the in-store efficiencies. Now, you can say, yeah, it makes sense for maybe the Dollar Tree's revenue growth to not be as good as we see with Dollar General, simply because they did purchase Family Dollar. I'd love to know how many times I've said dollar during this video so far, but just again, that is it's 3 times the difference. So great to see. And when I'm looking at something like a grocery store, revenue growth is huge. And it's a very important aspect for me to look at because, again, raise within margins, all that good stuff. Net income margin, again, we could see that Dollar General doubled what Dollar Tree is doing here when it comes to that net income margin. We have 17.48% for Dollar General and 3.61% for Dollar Tree. Dollar General pays a dividend. Nothing significant, but again, that's just something I like to see because as we are still running out of cash in this portfolio, I like investments that'll at least pay me some money. Unfortunately, we did miss the ex-dividend date for this one, so I'm going to have to wait like 6 months to get a dividend from this investment, but it's okay with me. I think we'll still be in good shape. And Dollar Tree obviously does not pay a dividend, so that's a mark against them. And a current ratio, 1.4 versus 1.2. That's apples to apples. That's not really anything worth losing sleep over with that difference, but does give Dollar General another plus point, extra point, whatever you want to call it, just because they do obviously have a better ability or are in a better position to cover any liabilities with current assets they have on hand. Now, I did use Simply Wall Street's valuation again, just it looks a lot cleaner than what I make, and also it's just easier for me to be able to do that instead of going through finding the numbers, typing in and all that good stuff. So according to Simply Wall Street's discount and cash flow analysis for the valuation, it is indicating that Dollar General is undervalued by about 11.5%. Now, that is not exactly why I am interested in this investment. The reason why I'm interested in this investment is because, as we all know, there's a little bit of uncertainty for what our future looks like. And I've said that I do like having a little bit more of a defensive portfolio. I know I've been taking on some risk recently with some of the investments that I've purchased, so I wanted something to err on the side of safety with. And it's not uncommon for dollar stores to do very well when there's an economic downturn because people are looking for cheaper alternatives. Now, you can't say the same for like a Walmart or maybe like an Ollie's Bargain Mart, but I don't know. This one just stood out to me. We already own Walmart, and Ollie's is a little bit overpriced right now. Same with Five Below. So that's why I like Dollar General, because I do think it's kind of defensive during downtimes, which is something that we need. Again, it's going to pay us a little bit of dividend. Will it grow? Maybe. Will it not? I don't really know. But it's something that'll be safe. And I think in the long run, dollar stores aren't going anywhere because they do create a value for the people that shop there. I know personally, like I said, me and my girlfriend get our spices from Dollar Tree because it's $1. And yes, we own McCormick, so I feel bad saying that. But paying like $5 for a little thing of black pepper is absurd when you could just go to the dollar store and get the same thing. I even check the ingredients to make sure there's not like, it's not like caking, or if you buy garlic powder, that's not all salt, and it's truly just garlic powder. So they do create that kind of value. I know I'm not alone. I'm sure other of you think the same way and also go to dollar stores. Also, I know when I was a kid, I loved going to dollar stores because I used to always get those little cap guns. I don't even know if they make them anymore. Side note, but yeah. So the valuation isn't the exact reason why I feel that this is worth adding to the portfolio. It has to do with the way that they are set up to handle economic downturns. Some of the positions we currently own are not going to handle it that well, and that's okay. But again, I think it's just important to have something that's defensive to offset those losses. So I'll add this to the portfolio and I'll be right back with you. I know I'm talking a little quickly here. I see I'm already at 17 minutes, but I wanted to make this one a little bit shorter just so I can give you time for what I want to talk about with Watch This Wednesday. So stay tuned. I'll be right back with you. Okay, so I did add it to the portfolio. I bought 25 shares of this. We were able to lock it in at 195.34 and it's trading at 196.99 right now. So we've made a little bit of money here, which is good. Again, it's a smaller position. It's a little bit more defensive, but we're just going to use that to offset any kind of risk in case of a economic uncertainty in the near future. Taking a look here at the portfolio, it bothers me the way EXP is in here because it basically says every day the amount of money we have invested in it is a gain, which is not really correct. So I don't know how to fix that either. That's something I'll figure out. Don't worry about that. But as we could see, we do officially have a few losers in here. Activision is one, Monster is another, and Spotify is another. Spotify is a little bit of a surprise there to me, but I'm comfortable with it because none of their losses is over $100. So we haven't lost $100 on any of these positions yet. I know Activision 2 has the Call of Duty, is it Black Ops? Yeah, Black Ops will be coming out soon, so I'm sure that will help boost those numbers. I did see Lululemon took a pretty big hit. That was one of our biggest gainers for a little bit there, but again, something I'll just have to look into and monitor. But overall, we're up $13,500 in this portfolio, so I'm okay with where we are. But this is where I wanted to kind of mention my thoughts here for Watch This Wednesday. As we all know, last week the market took a huge hit at the end of the trading week. Now, as a long-term investor, I could care less. It really doesn't matter to me because I'm not investing in these for the next 4 days. This would be a portfolio. In theory, we would be holding on to these positions for 3, 5, 7 years. And so I'm not concerned with what happened last week. But I did hear on the Motley Fool podcast, they were talking to somebody that wrote a book on the psychology of investing. And he basically said something along the lines of long-term traders are using signals from short-term traders right now. And they're really two different investing strategies. And I kind of feel like, let me take a step back. So yesterday when I talked about the differences in strategies with the market prices, with wholesaling versus flipping versus buy and hold, I really think that same concept applies to the stock market. And I genuinely feel that with me picking a stock every week and adding it to a portfolio could be perceived as maybe a more short-term mindset. And that's not what I want to come across as, or it's not really what I want to be teaching all of you to be doing, because again, I'm a long-term investor. Buying a stock a week is a little bit out of my scope when it comes to this kind of investing strategy. But I really enjoy making these videos, so it's not something I'm going to stop by any means, but I don't know if I'm going to actually be buying stocks every week. Again, this is just because it's the way that I actually invest, and that's what I want to be teaching. I don't want to be another person on the YouTube that's 3 stocks every day that are just performing super fantastic, and because that's not really how I invest. And looking at it like best stocks for month of August is meaningless when all I care about is how is it going to look in 2024. So I'm trying to think of like a better way maybe to go about this. I've thought about maybe building different baskets of sectors, because some of you have been asking, can I do a comparison between Netflix and Hulu? Not the best example, but bear with me. And so having a basket that would maybe be like a streaming basket, so that could include like Netflix, Disney, whatever other publicly traded one is in there, and just seeing how those perform. Or maybe like a payment system, so maybe having like a basket of Visa, MasterCard, American Express, and I don't know, Discover. Just a little food for thought there. But again, my goal here is, while it's never my intention to have somebody take this as advice or actually use what I present as real information and have my videos be your decision maker for what stocks you're going to buy, that's not my intention, but I know somebody out there probably has done it before. And so I just personally feel that if people are going to copy what I do, not copy what I do, but mirror what I do with their own actual money, I feel like it's my responsibility to be more responsible about that. And again, just having this kind of weekly buy is more of a short-term mindset than I typically would like. So a little side note there. Would love to know what your thoughts are, and sorry I had to throw that in there. But again, I do feel a little responsible for the information. Actually, I feel fully responsible for the information I pass along to all of you. I want to make sure I give you good information that follows my personal beliefs. And if you don't like my trading style or investing style, that's fine. There's thousands of other channels out there. I just wanted to be that different channel that's not about best stocks for this month, next month, 2 months from now. I want to help you understand how you can build a successful portfolio for the years to come, not the months. So anyway, I'll stop that rant right there. I hope you enjoyed this video. I enjoyed learning about Dollar General, and I hope that this one does pretty well for us. We'll see, and as we all know, time will tell. But again, really enjoyed making this one, and per usual, I always enjoy making these stock videos. So let me know if you have any questions or suggestions maybe of a company that I should take a look at, if you have any questions about the information I provided, or if you have any suggestions about kind of that basket approach and how maybe I can do that to make, again, continuing to help you understand these companies, but maybe not actually going ahead and buying them on the paper trading. So let me know your thoughts on that. If you liked this video or that idea, hope you consider liking this video. And if you haven't subscribed already, I hope that you consider doing so. If you're interested in buying some real estate, I do have in the Charlotte, North Carolina area, I do have the link to my real estate site down below. So feel free to check that out as well if you want to get in contact with me and use my assistance. And also, if you want a free stock, I do have the Robinhood link below as well. And that is a free stock. So definitely maybe take advantage of that if you don't already have a Robinhood account. Anyway, though, I'm done ranting here. 25 minutes. This is not going to be a quick video. So thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me. So I really appreciate that. But I will let you go ahead, enjoy the rest of your day, and I will see you next time.